on to the idea of a potential deal. It is important, and you noted this, but it's really important to note that Iran has not yet said we agree, we accept. It also has not said we reject. So we're still waiting for the Iranian side to say whether or not they understand that this memorandum is an understanding. That is going to be a critical next step. That's something that we're watching for very, very closely. But in the meantime, you are seeing moves in the market toward the directionality of a deal. Oil down significantly. You're seeing stocks rebounding, and all of that kind of is in this directional setting towards an easing of tensions between the U.S. and Iran. Certainly, there's a lot more to go here, but that's kind of the direction that we're looking at.
Yeah, I mean, markets have been pricing in peace optimism for the longest time, right? But when it comes to the actual sticking points, remind us, what are they? Are there any low-hanging fruits that we can actually believe President Trump when he says that the deal, or the war at least, with Iran has ended today?
Sherry, the sticking points have been some version of three things. The first one is nuclear material. The second one is what the U.S. does with frozen assets in terms of unfreezing those or paying or something like that. And that's kind of been a sticking point for a while, something that Trump has been a little reticent to agree on. But then there's something that Iran has been reticent to agree on as well, and that's the third point, which is unblocking the Strait of Hormuz, allowing that to free flow again, which really is kind of the catalyst for both oil as well as a whole bunch of other things, sort of a market focus. I mean, we're not that far away from Iran saying that it closed the Strait of Hormuz entirely, right? That was earlier this week. So that's kind of where we are here. Those are the big sort of sticking points there. I think in a broader frame, you're talking about some sticking points in terms of whatever Trump agrees is going to be compared to the Iran nuclear deal that Barack Obama signed, that Trump actually rejected his own way, pulled out of ultimately, but had long criticized. And so the terms of this are going to be compared, whatever this happens to be, whenever we see text of it or understand what's in this understanding. So that's going to be one of those things. You have seen some pressure from Republicans aligned with the president who have not wanted him to be soft on whatever an agreement might be. So that's going to be one part of pressure. And then the other side is, candidly, economic and inflationary pressure. You've seen an increase in retail gasoline prices, diesel prices, knock-on effects that go through the economy there. You've seen a high inflation print most recently in the United States, and all of that is having, sort of economic costs that translate into political costs as we're walking into the November midterm election. So there's a lot of other sort of pressures here. Some of them are pressures to get a deal. Some of them are pressures to not look like you caved. And I think on both sides, on Iran and the United States, neither side wants to seem like they have caved in some way, even though at some point, if you're going to get to a deal, somebody has to be okay with the other guy having fired last.
Derek Wallbank, Bloomberg senior editor there, joining us from San Francisco. And as Derek mentioned, of course, those inflation prints, we've been very much focused on the PPI number in the overnight session, rising at the fastest pace in more than 3 years, something similar that we saw with the CPI number. So we're watching treasuries, but given that we had falling oil, that relieved some of the Fed hike pressures. In fact, when it comes to the future session as well, it's falling oil prices at the moment early in the Asia session, that peace optimism over a potential deal with Iran, and of course all of the euphoria around SpaceX. So you can see NASDAQ futures pointing to some upside and the dollar holding steady. Had it worse staying over a month as that safe haven demand faded overnight. This is Bloomberg.
my old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it.
Wow.
Everyone has a dream, and a lot of dreams are, you know, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. Now, you don't start on the third floor or the lobby. You actually have to start in the basement.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
SpaceX is the biggest rising star of all time.
Anyone that's owning SpaceX, you're buying it for the Musk factor. And many that bet against Tesla and Musk going back a decade ago, that was proven historically wrong.
Elon Musk has appointed himself CEO for life. He has all the voting control. He has basically built a moat with alligators around himself, and that's not good for shareholders.
Feels like a milestone moment. This was an investment thesis that was unthinkable a decade ago for most investors. And I think now people are coming to grips with the fact that space technology is really here. What would have been science fiction to us maybe 10 years ago is now science fact.
Analysts and business leaders with their views on the SpaceX IPO. The biggest offering in history, raising $75 billion ahead of the stock's trading debut later Friday. Marathon Asset Management says SpaceX is clearly an investment-grade rated company when it comes to credit. Chairman and CEO Bruce Richards told us the tech giant is very well positioned across the board.
SpaceX is the biggest rising star of all time. You see what's happening in the equity market, pricing a $1.77 billion IPO, the biggest IPO ever being 2012 when Facebook came to market with $104 billion. And so it just is an order of magnitude greater than anything we've seen. In the credit markets, $17.5 billion as recently as last year, pricing a 12.5% coupon last June. And here they are taking the full debt stack, 10, 11, 12% coupons, repricing it down to a 460, the 10-year note today being a 453. So, it's definitely an IG rating because when you look at $20 billion of debt that they just priced in a 460. And rising star is a term that we use when a non-IG or high-yield issuer, and they weren't rated non-IG by the rating agencies, or non-rated, but they had 10, 11, 12% coupons that are now a 4.6% coupon. So they reissued, as you said, $20 billion to refinance the $17.5 billion outstanding. And when you think about a market cap of $1.77 trillion, or call it rounded up, end of trading day tomorrow, say $2 trillion, and only $20 billion of debt, that's only 1% of the entire enterprise value is in debt. In fact, with all the cash that they have, which will be in excess of $80 billion of cash, they have no net debt. Right. So it's clearly an IG-rated company as we stand today.
No net debt now.
As the markets view it.
I have to ask, Bruce, you're one of the most well-traveled, well-connected guys in the credit industry. What are you hearing about their plans to raise further debt capital?
Well, certainly they'll have capital needs, and they'll use the debt markets to tap into, those capital needs as companies, obviously do that. And so for SpaceX to have $30 billion or $50 billion of debt is completely within the realm of a strong BBB credit.
At a $2 trillion equity market capitalization, it really is nothing.
And with the cash flow they're going to generate as a business, and you see what they've done, with their data centers as of recent, and all the cash flows can be gushing, and the returns that they're making off of that investment. And so the company's very well positioned across the board.
Marathon Asset Management Chairman and CEO Bruce Richards speaking with Bloomberg's Matt Miller. And check out all of the content at the Bloomberg Video Hub. Subscribers can explore live streaming, news and interviews all on our Bloomberg TV shows, documentaries, reporter analysis and more are there. You can check it out at bloomberg.com/videos. And we do have more on SpaceX in just a few minutes. We'll be joined by the man known as Mr. IPO. Hear why the University of Florida's Jay Ritter says the company needs to get a lot of things right to justify that high valuation. In the meantime, let's get you caught up to date with some of the corporate headlines that we're following. And Adobe says its chief financial officer, Dan Dunn, is departing, leaving the company without a top tier of leadership after the CEO, Shantanu Narayan, announced in March that he would step aside. Chipmaker Marvell says Dunn will be joining its staff. The announcement overshadowed Adobe's quarterly results and an outlook for the current period that surpassed analyst expectations. Bloomberg's been told that NTT Global Data Centers is seeking at least $1 billion in fresh capital to fund projects in the US. Sources say the Japanese firm is working with Citigroup to raise the funds by selling stakes in a unit developing 34 projects. A formal marketing process is set to begin in the coming weeks, Sherry.
And Heidi, take a look at how we're setting up for the market opens across Asia. Futures pointing to some upside after we saw those gains on Wall Street. Of course, we had some optimism around the Iran war. We're getting more updates from President Trump saying that the war in Iran ends today. Of course, we'll see if we actually get that deal. In the meantime, oil prices are falling and there's euphoria around the SpaceX IPO. Trading debut, of course, is on Friday. When it comes to the South Korean market, the Japanese market, we saw a session of gains already in the previous session. We could see a third week of gains when it comes to the Nikkei, although we might see the first week of losses for the Kospi. Of course, we have seen a lot of volatility on that market. More ahead on the Asia trade. This is Bloomberg.
The most important news and financial information whenever and wherever it happens. I'm Michael McKee on the Mexican border, and this is Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
Oh, God, what fucking damn it, man!
Markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
In case you missed it on Bloomberg Tech.
This is not perishable demand. It's not something that if a window closes, there's not going to be a need for compute. So we are thinking about this in the long game. We are very confident that we are on track to that $15 billion number in a very, very short time, which is quite transformational for the company relative to the size of opportunity and the amount of revenue that we'll deliver.
Don't miss Bloomberg Tech, live every weekday.
Get your fixed income fix. Watch Bloomberg Real Yield now at its new time. Thursdays at 12 p.m. Eastern, right here on Bloomberg.
It is looking like a bright sunny day for Asian investors to round out the end of what has been a pretty volatile week, Sherry, but there's no excuses. It looks like the only direction at this point, safe to say, is high. If you take a look at the big reaction when it comes to what we heard from President Trump sounding very confident that the war with Iran is done, that we'll be getting a deal being signed imminently, that in fact the US, from his perspective, got everything that it wanted. It's just adding to the overall exuberance with regard to that SpaceX IPO. But take a look look at how we're setting up, given that we continue to see those declines, oil falling to a 2-month low, we're seeing yields falling as well. We are seeing those risk assets really balancing, chip stocks in particular, continuing to see that defense play overnight. We'll see that play out in Asia as well. The dollar not doing very much, but S&P futures up by just about 0.1%. We also had the ECB not really delivering much of a surprise. We saw European tech also seeing that bounce as well. So all of this, Sherry, setting up very nicely for Asia, but it's just a matter of that little IPO that we've been talking about too.
The
largest one.
Exuberance around SpaceX, right? I mean, it's really to do with that IPO, the largest ever, really double what we saw on record, Saudi Aramco back in 2019. Now, this price, $135 per share, valuing the company at $1.77 trillion. Now, we're hearing that retail investors submitted more than $100 billion of orders, so demand far exceeding the sort of 20% allocation reserved for retail buyers. So large numbers of Musk followers likely receive little to no stock. We will be watching, of course, the trading debut on Friday. Let's discuss all of this, and joining us now is Jay Ritter, Director of the IPO Initiative and Emeritus Professor at the University of Florida. Great to have you with us. I mean, it seems the excitement around SpaceX is right there, the demand. We might see this huge pop on trading day, but what does it take for that bounce to actually last?
The company has to execute. The value of the company, $1.8 trillion, is based upon the ability to grow revenue enormously and to become highly profitable. They've got some parts of the business, the Earth-based data centers that look like a very good, stable source of profits. The rocket launches, they've already got an 80% market share, even before Starship lowers their launch costs even more, which will allow them to put Starlink satellites into orbit at lower cost and offer Starlink internet access at an even lower cost to consumers. And that is likely to be a big source of future profits. Space-based data centers are a bigger question mark. There are significant technological hurdles there that could be a big source of profits, or maybe it'll never happen.
Historically, looking at all of these mega IPOs, what happens usually on trading day, and how sustainable is that rally, especially for companies really going to market at very, very high valuations?
Well, this is likely to jump on the first day of trading. It's not guaranteed, but very likely to jump. The table that you just showed saying it was 4 times oversubscribed, high, but nowhere near as high as on Figma and some other high-profile IPOs. And in Asia, it's not at all uncommon to see IPOs oversubscribed by a factor of 100 or more. A difference here is that for those oversubscription ratios, a lot of times many investors are asking for a lot more shares than they really want. Or at least that they want to hold rather than sell right away. Here, I don't think the subscriptions are grossly overinflated. Some of the big players like BlackRock, which I think Bloomberg is reporting is going to be getting $5 billion worth of shares alone. I don't think they ask for a huge amount more than that. So here, I think a lot of the demand is actually true demand rather than fake demand.
It's interesting, Jay. I wanted to get back to the point of how you justify a valuation for such a unique business proposition, unique governance for this company, right? Because we heard from Jim Chanos, obviously a well-known short seller, and he's been quite critical. He's calling this a hopes and dreams IPO, a $75 billion IPO for a valuation close to $2 trillion for a company with revenues of $19 billion and negative free cash flow. He goes on to say, you know, if you're talking about total addressable market, it's essentially whatever stories you want. Colonies on Mars, factories on the moon, data centers in space. You can use all of that to justify the valuation. Do you agree with that? And is that the hope and the dream that investors are buying into at this point?
Well, historically, companies that have gone public
Historically-
at very high price
historically,
to sales ratios,
you have
as this company
historical
is,
case like this you can compare
price-to-sales
to?
ratio of over
No.
90. On average,
here.
they have failed to live up to expectations.
On
Some
average.
have met those expectations, and investors have done very well. But on average, it
Dude.
doesn't happen. Lots of things have to go right. But why are private market and public market investors willing to give the
Whatever,
company
man.
such a high valuation, or for that matter, with Anthropic and OpenAI, very high valuations as well? Well, it's because companies like NVIDIA, TS.
Okay, I'm sorry. I gotta cut him off here because I don't want my IQ to be lower as a result of listening to this blabber blab. This guy Ritter, who's the director of IPOs, is that a position at a university? He works as as a professor at a university. He's an academic, so that means he don't work in the industry. He's in his little academic bubble. That means he's like 90% a Democrat. So he needs to disclose his bias against Elon Musk if he's going to be giving advice or speaking on a subject that people might be acting on. So you need to know that he has a conflict of interest. And Bloomberg too. Bloomberg is the main conflict. They just attract academics like this. Then he goes, well, historically, brah. Can you name me one company historically like SpaceX that is also owned by the same owner who owns Tesla and Twitter, and it was also half founder of PayPal, the most wealthy man? There's no case history to compare this to. That is a misrepresentation. And like they always say, past performance doesn't guarantee future results. It's for bozos like that. Case closed. All right, we'll hear him chatter some more, but it's going to be more BS. Go ahead, listen. Maybe you can draw your own conclusion. Say they get him. He's all squinting like here he's looking goofy. Come on, what's with the unflattering pictures? Why don't you show him looking all awesome at the stand or at his work? Look, he's all sad right here. Bloomberg. Man, you lose your credibility when you take cheap shots like this. Just do your job and report the news. Híjole.
Be very happy. If the stock doesn't do well, the employees will not be happy. Some of them might walk out the door.
Will not be happy.
So, while management is in control,
where the hell is he
an
anyways?
Incentive to keep the stock price doing well.
Where the hell is this guy reporting from anyways? Is he in a nursing home or something? What is this? Is that a bed or is he at the masseuse parlor? That's weird. I'm just saying. This eye right here looks strange. This one looks conflicted.
We appreciate your time, Jay Ritter, Director of the IPO Initiative and
blah, blah, blah,
Professor
blah.
at the University of...
Look at Sherry On's face. She's tolerating him.
On the Asia Trade, this is Bloomberg.
If you just cut out that academic BS, academics don't work in the industry, okay? They dilute themselves. Kind of like the gentleman before here. Not trying to be overly critical. I mean, this is objectiveness speaking here. If someone, who lives in a bubble or watching nothing but the mainstream news might be like, oh, look at him, he's being so biased. Actually, you can ask any professional, even if they're a Democrat, and you're like, well, yeah, that would be the response. This guy is all like, oh, the word's over. The one before when they're talking about the war and everything, the Bloomberg News person, I didn't catch his name. He looked like he looked very uncomfortable speaking on it though, probably because he knew it was what he was saying was biased. But what did he say here? Oh, he's like, either side doesn't want to look like the one backing down, and They want to look like they're the one throwing the last hit. Like, brah, you haven't deluded yourself that far. Last time I checked, the U.S. had like maybe a couple casualties. Iran had its supreme leader take it out. I think I can't use like certain words or whatever. So lame. You can watch videos all the time on YouTube. They're just dropping F-bombs everywhere. But if a creator uses it, suddenly it's like against rules. I digress. But I'm talking about delusion of these Democrats. I mean, like, the war was over a long time ago. Newsflash. When we took out their leader, their Navy, their Air Force, and their uranium facilities, that was the end of it. Okay, yeah, maybe they got help from the Houthis in the Strait, but we could have taken them out too. So, yeah, don't confuse it, y'all. Anyways, back to the program.
Bloomberg Markets reporter Anthony Stevens. So looking pretty decent for the open, given not only, of course, the tech story, but also the easing of tensions in the Iran war, the euphoria around SpaceX.
Yeah, we had a nice combination of several events back to back in the back end of the S&P session that really set up Asia quite well. You obviously had the Iran headlines alleviate a lot of macro risk, and I have to stress the cross-asset nature of the reaction to the latest headlines is materially different from before. Not only did we have the tech sector rally very hard, which it has done for many days, but also oil dropped very sharply, gold and Bitcoin rally very hard, and Asian FX NDFs traded in the US rallied very hard. They had a 1% turnaround from losses to gain. So the cross-asset confirmation that this move is more significant on Trump's part is an important data point to take into Asian trading. Now, in terms of the tech sector itself, the liquidity pocket situation also got itself resolved. The money from the SpaceX allocations is coming back to the market. Remember that SpaceX was up to 4 times oversubscribed as per our reporting. So that means 3 times the SpaceX is coming back to the market over the next coming days. It's going back into retail's wallets, and they are reloading on the tech trade. Lastly, Wall Street was very, very busy on the reporting side in terms of pushing the tech trade. We had a double upgrade from Bank of America in Intel, sending that stock flying, and Supermicro, which tried to raise money before SpaceX and looked like it was struggling, ended up placing that stock down 30%, and you saw Supermicro trade up 9%, delivering a 16% one-day return to block buyers there. So the sentiment going into the Asian session is very strong.
So now that we've got SpaceX sort of out of the way, that the big liquidity challenge seems to have been met, does that mean it's smooth sailing when it comes to AI trade from now?
I think it's smooth sailing for the more cash flow positive sides of the AI trade. I think what happened overnight is the ECB still raised rates. And they have a very well telegraphed rates path. Combining that with high US inflation, I think people are still going to be quite tentative going into the more speculative corners of the market. And we did see that in the US. Not everything was, guns blazing. It was the more high quality names that were quite strong. And we saw that on the back end of the Asian session as well. We saw bargain hunters come in very aggressively in Hynix yesterday, and they're following through today. So there's a clear preference for big liquid names to drive the AI rally higher. Now, whether that calms down into people chasing stuff like physical AI and robotics, that requires a little bit more visibility on the cash flow of these teams.
Anthony, I know that for a while you've been very skeptical of the market impact when it comes to any new headline from the Iran war. But we continue to see just President Trump talking up a potential deal. Even today saying that the war has effectively ended with Iran, although we don't have any agreement out. How should the markets be pricing this in, especially when we go towards the weekend and usually there are some other geopolitical events to contend with?
I think at this point, the market likes the consistency of his messaging, right? The reaction function to the inflation print was him coming back to the table, canceling these last-minute strikes, controlling his anger at Iran's escalation. We have a consistency of messaging that Trump wants a deal. He wants oil prices lower. He wants markets higher. He wants inflation under control. The consistency of messaging in what is sometimes, a volatile personal character is what the market really likes. And the fact that oil cannot get above 90 in terms of input cost into the rest of the trade allows market participants a more calm pricing of assets going forward. So it's less whether oil goes down to 80 or goes up to 90. It's more that the direction of travel seems to be controlling the crisis from the US side of things and not escalating it.
Markets reporter Anthony Stevens there as we continue to monitor the state of affairs as we get about 15 minutes away from the start of cash trading here in the region. But take a look at what we're watching when it comes to currencies as well. Dollar yen still holding at that 160, just above that 160 level. The dollar index not doing very much at the moment. The euro taking a little bit of a step back, but holding on to most of those gains as we had the ECB hiking. Christine Lagarde warning that the inflation risk is spreading. That first hike for the first time in almost 3 years there. Policymakers there essentially conceding that they cannot wait to see that war come to an end. The inflation being triggered by the Iran war and the energy crisis widening now just beyond just the energy issue now. This is the first policy reaction by a major central bank to that jump in oil prices as we continue to monitor that inflation situation. But let's bring our chief Asia FX and rates correspondent, Ruth Carson. So we did see the move when it comes to German bond yields as well as the euro overnight, but here in Asia, we're likely to continue to see that optimism. Do we see that being spread to global currency markets as well?
Yeah, it's very interesting to see that, Asian stocks likely going to follow Wall Street's guide higher, and sentiment as a whole is good. Yet, if you look at the $9.5 trillion a day currency market, things are actually flashing, that, hey, caution is still permeating here. The dollar, while flat, is actually slightly bid. We're seeing, dollar yen still at 160, euro dollar 115. But again, people are taking some of their profits here and also being very cautious going into the weekend because anything can happen still over the next 12 hours and 72. So do you really want to go full risk on? The Aussie is just barely clinging on to the 70 handle as well. And again, it's a risk on currency. You would think that with all the positive headlines that we've seen so far, that the dollar will be more sold off, but it's not. So it just sort of signals caution ahead.
That's why we use Australian dollar to Japanese yen, a risk-on currency.
With all of the uncertainty right now around the BOJ policy decision next week, Governor Ueda hospitalized. How are investors positioning for this?
Well, in less than 12 hours or so, we'll be able to get some CFTC positioning data, and that will give investors another clue, particularly when it comes to hedge funds, the leverage funds that are short selling the yen. So we'll get more fresh data on that coming soon. But in the meantime, absolutely, the investors, strategists that I speak with on a daily basis, it's incredibly hard to find any yen bull out there, despite a BOJ hike pretty much sealed by the market as a done deal next week. Why? We know there's still an energy crisis. We know that Japan is a big importer when it comes to energy from the Middle East. We know that inflation is still a problem in Japan. So with that in mind, is the BOJ still behind the curve? Well, dollar yen tells you it definitely is.
Asian authorities, though, fighting back from South Korea to India to the Philippines, central banks in this part of the world defending their currencies. Where do you see the biggest vulnerabilities if we see further legs of the sell-off from here?
Yeah, again, it comes down to who are the high yielders, which are the riskiest emerging market currencies in this part of the world. And we know two in particular stand out: India, big oil importer, and the rupiah, which is Indonesia's currency, and they have their own domestic problems there too. Definitely, in terms of speaking with people in markets, the most questions that I'm getting or bantering over is what's going to happen to the rupee, what's going to happen to the rupiah, because they are a little bit more isolated from, the AI trade out there. And absolutely, when sentiment is dented or when caution permeates, people tend to sell those two currencies.
Ruth Carson there, Chief FX Rates Asia correspondent with us. We have more ahead on the Asia trade. This is Bloomberg.
All right, there was a lot of information there. We have, that was Ruth Carson, She is the person who handles the currency side. And okay, so we're looking at Asians. Looks like Asia markets are set up for quite a well opening. And then on the news of the war ending, excuse me, on news of the war ending, gold and Bitcoin did very well. The question is, are we going to see a short squeeze where short sellers are forced to cover their positions and buying back the stock, pushing the market up? Yeah, because of the surprise announcement, it may have caught a lot of the short sellers off guard, as many people were on one side of the boat, figuratively speaking. That also news that Christine Lagarde, the European Central Bank, is worried about inflation and the rate hike. The interview with Ruth Carson, okay, going back to that, she's talking about the $9.5 trillion currency market. The dollar slightly bid still, even though in spite of the news. And that might be simply because people are taking profits right now and are cautious before the weekend. Because, a lot of times over the weekend, that's when things escalate. Australian dollar is a risk-on currency. That's why we trade Australian dollar, Japanese yen. Governor Ueda was hospitalized, Japanese yen, Bank of Japan governor. Okay, so what we got here?
In the game that saw 3 players sent off, the expanded 48-team tournament will be played across the next 39 days in Mexico, Canada, and the United States. And of course, Heidi, here in Japan, we're pretty much excited as well, especially given that there are high hopes with Japan entering as Asia's top-ranked team. Will Samurai Blue be able to reach the quarterfinals? Especially about 4 years ago in Qatar, Japan did win some surprise victories over Germany and Spain, and then managed to reach the round of 16. And you can see, of course, the excitement being translated during the course of the World Cup with some consumer-facing companies that will be watching. Because, right, how do you watch these games? You have to go out, perhaps have a glass of beer, right? So we'll be watching the likes of Asahi Group, Kirin, their partners with Japan Football Association. They could benefit. We'll be watching the likes of Mizuno, ASICS, companies tied to these viewing parties and sportswear. And of course, let's not forget, when it comes to Asia, we also have South Korea playing against the Czech Republic today.
Such a huge team and such high hopes there, of course. And, here in Australia, generally, it's a whole lot of time being spent on trying to work out what the time conversions are, right? At what o'clock in the morning do we have to get up to be able to catch the Socceroos? But this is also a situation where we've got sticker shock, Sherry. This is the most expensive FIFA World Cup in history. Ticket prices, transit fees, however you look at it, there's a lot of controversy when it comes to high costs, with host cities looking to offset these costs associated with the games by passing them on to tourists and consumers and taxpayers, so they don't receive revenue from the games. All of that goes to FIFA. The US government approved $625 million in grants for the 11 host cities in the US, but experts saying that may not even be enough to cover expenses. They could be turning to local sponsorship deals, private donations, taxpayer money to defray those costs. So it is a very, very unique event that spans in terms of costs for security, transport, concerns from the very beginning to do with that. And at the same time, though, we also have data saying that it's kind of a non-event for Americans. More than half of US adults saying they're unlikely to watch any of the tournament games on TV at home. Only 13% saying that they're certain to watch, despite it being in mostly their time zone. You will want to get more, obviously, on the World Cup coverage on Bloomberg. The second season of Sports City has just premiered, diving into the business behind the most watched sports showdown on earth. You can catch the second episode on June 18th on Bloomberg.com.
And Heidi, of course, we're headed towards the market opens here across Japan, South Korea, and Australia as well. It could be an update. You can see the futures market right there pointing to some upside, especially with the Kospi gains of 7.9% in the future space. Of course, we are still headed potentially for a week of losses, the first in South Korea, given the immense volatility that we've seen in that market. Of course, foreign selling is still pressuring the Korean won, pressuring the stock markets as well. And we are headed towards perhaps some volatility next week as well here in Japan, given that we do have that Bank of Japan policy decision and the governor Kazuo Ueda is expected to miss it. We'll also be contending perhaps to some of the implications of the ECB's first hike in almost 3 years of monetary policy also in focus. The market opens in Sydney, Seoul, and Tokyo are next. This is Bloomberg.
All right. What up, y'all? It's the KRISTOPHER. It's the KW Podcast. KW speaking here. Just wanted to thank all my viewers for watching another episode of the KW Podcast. And today we're looking at the market conditions ahead of the trading day. And it appears that the war has ended, although I believe it ended a long time ago. But, you know, in terms of official foreign policy for the U.S., it's over. And one thing you can rest assured is that the Iranian government doesn't want any more. I mean, we've decimated them. And so I think we've worked it out. Pakistan's helping out. Finally, our allies are stepping in, although they weren't there initially, which was a big disappointment. The repercussions are heavy. We even had the king of Britain come and speak in front of Congress, basically apologizing for not being there. Yeah, $1 late, $1 short, buddy. But anyways, our allies are kicking in, and so. Like Ruth Carson said, dollar still slightly bid, meaning that people are still slightly nervous, but that may be mainly due to the fact that we're coming up on the weekend. People don't want to hold risk trades overnight or over the weekend, and because if history is any indication, it seems like the escalations seem to happen right before the week starts, like usually on Saturday, Sunday morning time frame. So as long as nothing happens this time, you can expect a nice open Monday on the markets. Tomorrow, we may see the market moderately climb up, but we also could see a pretty strong jump because a lot of people were on the defense. A lot of short sellers, a lot of people were metaphorically on one side of the boat. And so when all of a sudden the weight switches on the boat and everyone's on one side, everyone scrambles, to balance it out. Short sellers who borrowed stock have to now cover the short sales by buying back that stock or using their own stock to cover it, thus bidding up the stock market in general, and especially if they're shorting index style funds. Okay, now what else we got here? We've got the Bank of Japan still way behind the curve, meaning that their central bank is too slow to react to changing market conditions, but that might change now that the war's over, and since Japan's an oil importer, that is the main driver of the inflation that's been concerning everyone. That's probably going to go down now. It's not going to go down as fast as it went up because it's going to take time for the logistics to get sorted out and systems to go back online. But I would bet that is over. That's my feeling. And so if you are a stock investor, if you are a currency investor, Australian dollar, Japanese yen long is excellent trade. or just buying the S&P 500 and the index. If you're buying individual stocks, they'll probably get lifted too, because uh, when the tide rises, all boats rise, even the slow ones. So that metaphor right there should explain everything. All right, y'all. Best of luck with trading. Things should be opening up here in the marketplace. So if you're going to get in on this, you got to get on it soon. Anyways, that wraps it up for today. Uh, feel free to like and subscribe, and let me know how you think. What do you think of my presentation, or add your comments or ask any questions in the comment section. And we're never too busy for referrals, so please hit that share button. Send it to your friends, your family, coworkers, anyone you think would find this interesting, especially someone who watches the markets and trades, because they will find this information very valuable. And other than that, thanks again. I love all my subscribers and appreciate and have an immense amount of gratitude for your viewership. Please like and subscribe, and I'll see you in the next one. KW signing out.